Hello guys, welcome to the Trading Parrot. I'm gonna cover the general markets as I started doing yesterday. I cover it in a separate video. This is how we closed yesterday. You can see Apple, Nvidia, Meta and Amazon all in the green. We kind of have a little bit of a mix. Tesla is down 5%. Let's have a look more in detail. Pre-market S&P is at 671. That's around 2 points above the closing price. So this is indicating that we could potentially open the market in the green. Nasdaq is the same thing. We're probably about to see an all-time high on Nasdaq. Currently, pre-market price is 24,967. It could print for the first time 25,000, which is just crazy. You can see how the RSI is getting into 70. Getting very close to the recent highs of 75. We could say that partially this is being influenced by the government shutdown, which has a track history of influencing positively all the assets. We're supposedly not gonna get today any reading on labor metrics, so we cannot know if something is broken or if something is fixed, on whether that is gonna affect or not rate cuts, but the chances of a double cut went from 25 basis points, now include 50 basis points, not just at 1%, but at 2.2. Not very significant, but we kind of double it, right? DXY, let's have a look. Still in the area of holding the retest of the breakout. We have gone way deeper into 97, but we are kind of coming back into the 98. That could be considered a retest. Momentum still pointing up, gold still being held by the resistance of 79.49, as you can see in there. We are watching very closely gold because it could potentially produce a breakout from here. Personally, I'm leaning towards a slowdown in the gold, not just because of the weekly, but also because of the monthly that has achieved already 90. Yeah, way in the past we achieved 98. That we can agree on that, but I think we should be seeing maybe another push, but then a slowdown and sideways for a few months. VIX, no news, still being held by the 21 weekly, still expecting an expansion with further downside on S&P and Nasdaq. Timing, no clue. You can see that Nikkei, instead of breaking down, now is pushing into new highs. It's getting into the 70s territory. This goes against my initial idea of the rolling over and the breakdowns that we were seeing in here. So it's completely going in the opposite direction than the hive bearish signal in here is saying that we are supposed to be doing. We'll have to see how we close today. It's mainly driven by tech shares in Japan. Hitachi is currently leading the rally. Apparently, they have some incoming rate cuts. Everything to do with AI is benefiting from that idea, as you can see. Nvidia is opening in the positive today. Amazon as well. Tesla is in the monthly resistance right there, as you can see, after having bounced. So we'll see if Tesla now is gonna start the next leg. We already have on the monthly one in 2013, one in 2020. So this breakout could push into 90s, and that will be really crazy for Tesla. Pretty much all tech stocks are opening in the positive. This includes Microsoft, Meta, MicroStrategy. Yesterday, we were seeing that was below and testing to the downside, but today is having a big comeback. As I said, Bitcoin definitely helped on this. We're opening pre-market slightly below at 351, but not a big deal because we have an engulfing candle print right at support and the RSI is reclaiming the support. So we could see additional upside coming in from here. And if Bitcoin continues to provide seasonal typical performance, then MicroStrategy could have a rally back into the 440. Of course, for that, first we need to reclaim the 21 weekly located at 372. Robinhood is having, wow, a massive week. It's even opening in the positive at 146, and you can see this large, huge candle there right against the resistance of 79. Getting very close, probably needs to get into 150, and it's gonna achieve that. we are in a channel to the downside. It's crazy, but all this exponential rally is in a context of descending highs and lows. This could mean that eventually the bubble on Robinhood could pop and crash significantly. I am not necessarily calling for when. We got incoming earnings on end of October. We'll see how we do at that point. With the bull market, it should be big, but let's remember that retail hasn't been that present. The past time we went into earnings, it was in the positive, but we took the earnings after a pullback. After that, it consolidated and it carried on. Let's have a look at the news of the past 24 hours in terms of macroeconomy. US jobs data blackout, shutdown. That's what I'm talking about. I don't know where are we getting this data from jobs that I was reading before if we are in a blackout. BLS, NFP, and jobless claims are delayed, creating a data vacuum into today, next week. Markets lean on private proxies. This is bullish, 7 out of 10. Rate cut odds surge again. We are in the territory of 100%. So far, it's a matter of whether we get a single or double cut. That is definitely bullish. At least it's tradable as a bullish thing. Not that I think that necessarily a big cut is a good thing consistently for sustained gains, because once you get a double cut, there is a chance that that could be a market top if something really breaks. And since we are in a blackout, there you go. We can only see the markets going up, and we really cannot fully inspect in detail if something broke. I don't know how you feel, but that makes me a little bit itchy, to be honest. Fed turned cautious on cutting too fast. That happened on the 2nd, that was yesterday. Private labor signals softened. ADP, that's why it's a private signal. Layoffs trackers say cuts high, hiring plans weak. Weak labor, easier Fed. Trade wars, tariffs brought but partially capped. This is a mix, a neutral. Yesterday we also have some geopolitics, tightening energy trade channels. Taiwan signals alignment on restricting Russian energy. The goal is near record 7th straight weekly rise, helped by shutdown and cut bets. This is slightly bearish because it competes for flows short term but confirms easing backdrop. I want to have a look at the liquidations on Tesla. What we are currently seeing that we have experienced the largest pool of liquidation already at 430. We have now complete everything until 477. There is some leftover at $500, which is question mark whether we're gonna take it straight away or not. But you can see that to the upside, we really don't have anything because it becomes kind of price exploration. To the downside, things start appearing from $300 and below, which I will expect to be hit in a bear market. If you want me to cover liquidation levels on any of these assets, including on Forex, we can have a look on any of these specific general market videos. Today, I just want to look at Nasdaq because I remember that there was a liquidity past the 572. Since we're putting all-time highs at 600, it's important to note that up until 635 we have big pulls, but let's put all the area in here. Right after that we cool down a lot into 700, so I will say the low-hanging fruit is 630 today. If you want to trade general markets, talking about indices, stocks, Forex, and even crypto, you have support from VT markets everywhere except for the US, and you can get 100% welcome bonus if you use the link in the description to sign up. Thanks so much for doing that. That really supports the channel. I'll see you in the next one. Bye bye.